Get in another market voice. We have Sanjay Parekh, founder and CIO of Sohum Asset Managers, who joins us on the show. Hi, Sanjay. Good afternoon, and thanks so much for joining in. Well, let's address the elephant in the room then. The banking names. I was just taking a look of your portfolio constraint, and out there, the weightage that you have to some of these banks, where you are a tad bit overweight in comparison to what indices give it. The top banks, I think, would be SBI as well as IndusInd Bank, in relative terms, while you've been relative underweight at HDFC Bank. Now, given this kind of underperformance we have seen, the valuations, the numbers, which were rather poor, would you look at now upping your game on HDFC Bank, or do you think there's still some more pain in store? So you'll stick with the ones that you have a relative overweight position, SBI, IndusInd Bank, you have a small part even attributed to a J&K Bank. Please go ahead.
Yeah. Good afternoon, Nigel. So, to begin with, we were positive on financials. Now for more than a year, it's underperformed almost by 12% compared to Nifty. We still believe, the earnings you see some issues around margins coming under pressure, some issues around deposit, cost coming higher, not coming in easily, and the balance between LCR and LDR. So the liability side is a little tight for the banking sector, and it's not easily able to pass on. So that is an issue, of course, for HDFC Bank, but for others as well, we are able to see that. But what is underappreciated is the asset side growth, the asset quality, which is absolutely at the top end. I mean, at the best ever, and things don't look to be slipping up. So, if you take even a little higher rate cost, the loan growth is higher, the franchisee is strong, and hence, if you have a loan growth which is higher, you could have some margin spread, yet the NII growth is good. So overall, for the banking sector, we think really it's reasonable from a valuation perspective. On specific bank, you said, clearly we think it's absolutely a great franchise going through the merger process. And, with such a size that it has, there are certainly some challenges that come in. And in this case, more on the deposit side. We think that it could be 1 or 2 quarters, but then very, very clearly, such great franchises, you can participate, when there are some interim issues. We've seen 24 years of outperformance and then last 2 years of underperformance. And it has, of course, the 2 years underperformance has been quite stark and hence looks like more like 3-4 years it's underperformed. But the major underperformance has come in the last 2 years. So we believe very, very strongly positive about the bank, and at an appropriate level, we clearly will increase our weight.
Sanjay, hi. Good afternoon, and you guys are doing very well performance-wise. So congratulations again. So continue with that. Just a quick word on the market right now, Sanjay. At the margin, how is it looking? A little bit of nervousness, very, very clearly visible. Just very near term, or is it earnings related, and are people reassessing things? Yeah.
No, Prashant, as we've discussed this also. We are moving faster. So, if you take earnings of 1100 on 24, 25, and already the 94, 25 is not even started. And then we move to 25, 26, where, let's say broadly, we have less visibility, but let's say it's nominal GDP plus growth of 1250. Then you could justify an upside, which is like 15% if you give 20 times from, 22,000 or so. So it was moving faster, clearly, and ahead of times. And then there was certain, in certain segments of mid and small cap, there was clear froth. We could see that in some of the PSU names, some of the railway names. I remember one of the financial space, we used to own it at one time earlier, not here in my earlier avatar, and it went to 4 times. And, nothing suggests that the price to book of that financial entity should be 4 times. So, there were excesses that was happening. Perhaps the retail euphoria was too much. And, that's what is now giving in. Having said that, we could still see some more pain, We think it will be more in mid and small caps. Larger caps should settle down, but any fall, which could be maybe 2, 3, 4% in the larger cap, it'll be a very good opportunity to buy in, because structurally we are very positive, and then the risk return becomes favorable.
Sanjay, hi, afternoon. Reema here. You all are underweight on IT as an entire basket, but wanted to get your thoughts in on the kind of rally that we've seen, particularly in mid-cap IT names. Birlasoft 160% in the last 1 year. Zensar 145%, Cyan 140%, Persistent is up close to about 80-90%. Midcap IT has had a phenomenal run in the last 1 year. So if you had bet on that, it would have made investors a lot of money. So what have you made of the numbers that we've seen and juxtapose it with the kind of rally that's already taken place?
We missed it. We missed the mid-cap rally, and all throughout the thought was that, they are at a very high premium. And while the growth was higher, but the premium to the larger IT companies was pretty large. But let's say if they were at 20% premium, they moved to 60% premium. And clearly we could have, picked up one of the winners there, and we missed it. On the overall IT space, I think the commentary that you also interviewed some of the larger companies, and you could see that, it's not about this quarter, it's not about next quarter, it is about FY25. And you could see the cautious outlook with some optimism. Now, the key point is on 25, will they grow at 7-8% dollar terms? If that happens, I think it's very good. But if they were to disappoint next year, which will happen in the next quarter where they'll guide for 25, then I think, we have we will certainly have to be worried. Having said that, none of them are cheap, right? So even the larger cap stocks for last 3-year growth also has not been 10%. And the next 3 years also, you don't see them growing at 10%.
Okay.
So with that in mind, we think that, you have to be underweight. We reduced our underweight, and we are watching it closely, but we still remain underweight.
All right. Sanjay, just to clear the air, on HDFC Bank post this recent fall, you all will be looking to be buyers, right?
Yes.
Okay, got it. All right. Maybe you'll miss the IT rally, but you'll have been relatively overweight on the pharma space. And that's worked in your favor because that index has come back to life. Will you be buyers even now? I'm just looking through your portfolio. I think Sun Pharma, something you all got in. Gland Pharma has worked well for you all. And I think Oro as well. So are you looking to add on to the pharma names?
Yeah, Nigel. So, Gland Pharma is moved up almost 100% from our entry price. Sun Pharma was a core. When we started the fund itself, we own it, and we're continuing to own it as a core holding. And of course, Oro was a recent increase. And what we saw was that the market returns from at 22,000, 21.5, 22,000 was limited. And relatively, pharma on a bottom-up basis was looking better. So it was a little bit of defense. And also in the investments that we have done recently, we think that there is a 15-20% upside. So we would increase our weight further to pharma, but it will be very selective and slow. So it will not be a big overweight, but will be a mild overweight over the benchmark in pharma.
Okay, Sanjay, we'll leave it there. For now, though, thank you very much for joining us. Great speaking with you. Good conversation as always. And thanks for your time here on CNBC-TV18. Look at the market.